today's Master Investor interview, we are with Richard Wolanski, who is Finance Director at Avation PLC. I understand that you've just, celebrations are in order at the moment, just signed a big deal with Thomas Cook. Could you explain a little bit about that to us?
Yeah, what we did is we announced this week the biggest deal in the history of the company. So we're an aircraft lessor, so we own aircraft and lease them to airlines. The deal that we've just signed with Thomas Cook is for us to buy two brand new Airbus A321 aircraft and then lease them to Thomas Cook for 12 years. The deal represents on the 30 June balance sheet about 25% growth in current balance sheet, and also that'll flow through to similar sort of proportion to revenue.
I mean, this is for people not familiar with your business. This 12-year deal sounds like a great deal in terms of visibility. You know exactly where you are. Is that a typical length of the sort of deals you do?
Yeah, that's the way that the air finance industry works typically, because when you're talking about us buying a brand new aircraft, which might have a list price of anywhere between $20 or $50 million, we obviously need the certainty and visibility of long lease times to be able to make that commitment. Anecdotal, or the best analogy that I like to give people when I talk about aircraft finance is that owning an aircraft is a lot like owning a property that you buy to rent. You know, you buy the property, it's got a tenant in it, you use the bank's money to buy the property, and then hopefully you have that tenant who's paying off that property while you own it, and at the end of the day you end up owning that property. And that's exactly how it works with air finance. Although perhaps the major difference is that aircraft yield 5 times what a property yield would be. So typical property yield would be, say, 3%. Aircraft can yield 13-14%, and in fact that's what our yield is. And the other obviously difference is that property can last for 100 years, 200 years, or theoretically forever, whereas a plane has a 25 to 30 year life period. So it's going to necessarily yield much higher because it's got a shorter lifespan.
Right, and I mean obviously 13-40% yield is great for you.
Yeah.
Presumably great for the shareholders as well.
Correct.
I mean, not that it's so much of a concern, but what do your customers get out of this arrangement? Because I mean, couldn't they just cut out the middleman?
Yeah, look, there's perhaps the biggest misconception out there in the market, and for people who are not aware of the air finance industry, is that airlines own their own aircraft. It's not in fact the case, and indeed the trend and where we sort of sit today is that companies such as ourselves own every second commercial aircraft flying today, and that's very much a growing trend. 20 years ago, companies like us owned 1 in 8 aircraft, whereas today we're involved in the purchase and delivery of every second new aircraft that comes onto the market.
And the advantages to someone like Thomas Cook are what are they getting out of it? I mean, it's obviously cheaper than buying, but are there any other issues that?
There's a number of reasons why the airlines come to companies like us. One, they need access to aircraft, and there's often a long lead time, and aircraft are often sold out for a number of years, as we hear the headlines from Boeing and Airbus. They're big capital purchases, and the airlines have had a relatively tough time over the last sort of 15 years or so. They need new aircraft, they need efficient aircraft, they're opening up new routes, they're replacing aircraft, and so they don't necessarily have the capital. Airlines may have large infrastructures, a lot of employees, they may have unions, they've got an incredibly high fuel cost for the past 10 years, or past 5 years at least, and so all of these things contribute to them needing the finance that companies like us can offer.
And I mean, obviously the airlines are grappling with fuel prices and the economic cycle, consumer demand.
Yeah.
What are the influences on your business model in terms of the economic cycle? You're obviously, presumably you're really happy in a very low interest rate environment. Could that change? I mean, if the Fed raises rates next year, are you going to be more pressured? I mean, what are the positives and negatives on your business model in terms of the economic cycle?
Yeah, look, that's a really good question on risk. And so from the perspective of interest rates, because we're a leveraged company, and today if you look at our balance sheet, we're leveraged to about 75% of our total assets. Although that is conservative, it's a conservative level in our industry. What you typically have with interest rates is that lease rates, or the monthly rent that the airline will pay, typically follow interest rates up and down. And you have to ask yourself the question as to why would interest rates go up? Now, typically interest rates will go up because economies are doing better. If economies are doing better, what it means is that more people are travelling, more people are taking holidays, airlines can charge more for airline tickets. And so they're making more money, they're willing to pay more, and they've got a greater demand for aircraft. So lease rates will follow interest rates up and typically follow interest rates down. But that is obviously a key risk. Avation mitigates that risk because we typically sign leases for the long term, we fix our lease rates, but on the debt side of things we also fix our interest rates over the entire length of the term of the lease. So that might be for 10 or 12 years. Now, one of the great things about Avation for any potential investor is if you look at our bottom line, we've got 25% after-tax profit margin. That means that 25 cents in every dollar of revenue ends up as profit after tax. That's extraordinary. And it's extraordinary in the context of a company that's growing between 40 to 50% a year in terms of its size. You know, that is really just a function of where airlines are and where the demand for aircraft is. You know, global passenger traffic is doubling every 15 years, and that's not my numbers. That's what Boeing and Airbus will tell you.
So it obviously means that airlines it really suits them to use your services, and they're happy to pay, a sort of, let's say, a premium in terms of having that sort of service from them.
Well, I think we make it simple for airlines. You know, they've got thousands of employees. If you look at an airline's P&L, you'll know that typically 40% of the cost of running an airline is in fuel costs. And the average fuel cost today, even with the recent drop in oil price, is still double what it was 10 years ago. And so we actually make up a small proportion of their profit and loss. And so we offer many advantages. We deal with the aircraft at the end of their lives. We have access to new aircraft. We're able to help manage their fleets and provide the capital. So it is an industry that's growing extremely quickly and is also has a few barriers to entry. You know, the background to our company is that we're all aviation people, and that makes an important difference when dealing with airlines.
Okay, just to finish off, I mean, you just signed this big deal with Thomas Cook. Are there other sort of things in the pipeline that you can sort of tell us about that you're looking forward to doing, or an expansion plan?
Look, I'd encourage people to have a look at our results for the last couple of years. We've been growing at 30 to 40%. We've been maintaining these really high profit margins. We've got lots more organic growth in delivering our core product, which up for the last couple of years has been a turboprop aircraft, which is a smaller aircraft but still in high demand from the airlines. So I'd encourage people to look at us and actually value us fundamentally, value us on our profits, value us on our growth, and value us on the opportunity we've got going forward. You know, we have contracted new fleet deliveries that will see us grow by 50% in the next 12 to 14 months, and that'll impact the top line and the bottom line earnings. And it's, as you know, bottom line earnings that make share price go up.
Richard Wolanski, Finance Director at Avation, thanks for speaking to us today.
Good to speak to you, sir.
Thanks.